All right, folks, as Reed said, my name is Matthew Buckley. My call sign's Wiz, and obviously my parents did like me. That is my God-given Christian name, but I earned that. That's my call sign. As Reed alluded to, I flew 44 combat missions over Iraq in the FA-18 Hornet for the United States Navy, about 15 years of service. Graduated from the Navy Fighter Weapons School, also known as Top Gun, and I was also an adversary pilot. So I was kind of the bad guy towards the end of my Navy career. Flew around in jets painted like former Soviet Union aircraft. We flew former Soviet Union tactics, and maybe we should ditch the word former nowadays and just call it the Soviet Union, since that's probably one of the things we might be talking about here. Went from literally from the cockpit to the trading pit. I became the managing director of strategy of one of the largest volatility arbitrage equity options trading firms in the world, headquartered right there in the Chicago Board of Trade. Also, while I was in the Chicago Board of Trade, I was the founder and CEO of ONN TV. Many of you remember that, 2008, 2009, 2010-ish, the Options News Network. We shot there on the floor of the CBOT, the CBO, had an absolute blast, helping mom and pop retail traders such as yourself get a behind-the-scenes look at really what goes on behind the floors there. About after 3.5 Chicago winters, I decided that was not for me in Chicago. No offense to anybody who's from Chicago. But I got to be honest with you, headed down to South Florida, where I started Top Gun Options, where I'm currently the founder and the CEO, one of the portfolio managers. And one of the portfolios we're going to talk about today that I manage is the weekly options model portfolio. I'm also the chief development officer for a hedge fund based up there in Chicago, also the proud father of beautiful kids who are spread throughout the state of Florida today, literally playing hockey. Additionally, if that doesn't keep me busy enough, I'm a Fortune 500 executive consultant. What the hell does that mean? I took everything that I learned flying fighter aircraft in combat situations and applied them to my trading, the discipline, the risk management, being able to have a contingency plan, keeping everything non-emotional. When something good or bad happens, get out or make an adjustment. I've also applied that to the business world as well. So, for example, I'm sitting here in beautiful Jacksonville, Florida today. Drove up from South Florida. I just got back from London and Paris last week. We're speaking to various companies, literally companies that represent a diverse swath of the economy. What the hell does this have to do with trading at all? Absolutely everything. Now, I can't trade in the companies that I do consulting with. Obviously, I have a fiduciary duty with these companies, so obviously I can't. I don't discuss what's going on in particular companies, but guess what? That gives me an unfettered access into what is going on in the economy before Wall Street even knows about it. Folks, if you're watching Comedy Central, what I affectionately call CNBC, to get your financial news, you're going to get destroyed. Okay, by the time it gets to you, it's already old. Okay, by the time it gets to the floor, technically it's old. I usually know a lot of this stuff before it happens. Whether a company's hiring, whether they're firing, mergers and acquisitions, coming out with new products, new services. I know what's going on in the economy, folks, and my portfolio performance reflects it. Stevie Cohen, well, actually, I guess if you're rich enough to write $1 billion check to the government, you won't go to jail. But a lot of his lieutenants have gone to jail for trying to get access to these companies to trade on inside information. But my Top Gun options traders get the benefit of my experience throughout the business world here at TGO. I also apply this methodology to a lot of other high-performing teams, not just in the options space or in the business world, but also in the NFL. Worked with Cam and Coach Rivera last year, and also Coach Fish the year before up in St. Louis. So everything I'm going to talk about today when we talk about trading weekly options comes from kind of that. I have a huge marketing department, right? Top Gun options, really original there. But you'll see why it's called Top Gun. And in case you guys didn't know, the only true NFL team is the Philadelphia Eagles, by the way. But I digress. Okay, let's go ahead and get started. From the cockpit to the trading pit, what we're going to talk about today, I call afterburner trading, because we're going to talk about weekly options, and I'm talking about weekly equity options. Google, Twitter, S&P 500, GoPro, Pfizer, whatever it is, those are equity options. I don't trade Forex. I don't want to be at the mercy of the Swiss National Bank waking up tomorrow and doing something else. I don't trade stocks anymore. It's a waste of money. Why buy 1,000 shares of Apple for $114,000, which I don't have, when I can control 1,000 shares of Apple for a certain period of time for a fraction of that price? So I haven't traded in a stock in, geez, maybe 2 decades. Well, that's not true. Sometimes some strategies and tactics that I employ are called delta neutral, and sometimes you have to employ stock as a hedge. But I don't trade stocks as a primary. It's a waste of capital. So this is our newest Top Gun options model portfolio. We have other portfolios here at TGO as well, but today we call it weekly options afterburner trading. Why? Because it can hurt. If you're trading weekly options expire every Friday. Many of you are familiar with options that expire each month or maybe in a couple years called leaps. Weekly options expire weekly. Yesterday afternoon at 1600 local, East Coast, we closed 3 trades for $7,600 in profit on limited risk. That's a 61% return this week alone. 3 trades, Apple, Twitter, and SPX. So I want you to take a look at this screenshot of our Apple trade. We had an iron condor on this week, and I'm going to put an iron condor on Apple here shortly as well, because I think it's going to stay range bound for a couple more weeks after the earnings report. I want you to look at Mr. Frowny Face first. Okay, this is the Trade Monster platform, or actually technically it's Options House now, but the Trade Monster. Max potential loss. Good options traders always look at their max loss first. How much can I lose on this trade? If you look at a trade and you go, hey, how much can I make on this? You're doing it completely wrong. Max potential loss on this trade was $5,300. Why did I pick $5,300? The weekly options model portfolio that I manage is based on a $100,000 portfolio. Okay? One of my trading rules of engagement, ROE, is that I do not want to risk more than 5% of my model portfolio on any one trade. Why not 2.5? Why not 10? Why not 7.5? Why not 100%? 5% based on over 20 years of trading options and managing portfolios is good with me. If everything went to hell in a handbasket this week with Apple, I would have lost $5,200. So it's limited risk. Now you can look at Mr. Happy Face, max profit. The max potential profit I could have made on this iron condor this week was $2,250. Nailed it. Finished right between the uprights. We also had an SPX bull put spread on the 2015-2020. If you have no idea what the hell an iron condor is or a bull put spread, don't worry about it. We can teach you that. Again, look at Mr. Frowny Face. Max potential loss was about $4,700. Max potential profit, $2,900. Nailed it. That one closed yesterday. Obviously, the S&P closed well above 2020 yesterday. You can see up here in the upper right, it says 2055. So we crushed that trade. So now you're seeing about $5,000 in risk here, about $5,000 in risk here, and here was our last trade for the week, a Twitter bull. Why the hell did I say Twitter like that? Twitter bull put spread, 37.5, 38. There you go. Max potential loss in this trade was only $2,500. Why? It was 100 contracts. I didn't feel like trading about 200. I don't always have to go up to I don't want to risk more than $5,000. In this case, I only wanted to risk $2,500, and look at that right there. Bam. 100% profit, $2,500. These are 3 trades, and as you can see, February 6th, these all expired for max profit. Okay? The maximum risk, if you do the math on this, was $12,400. We made $7,600. That, again, if you don't want to do the math, 61% return. Okay? Weekly options year to date, we have been absolutely crushing it as well. 14 kills. We have not had a losing weekly options trade. We had to roll 3 of them because they were moving against us. We rolled them out to the following week, and then they closed for some profit. We have had 0 losses. Now, that was me knocking on wood. This has been a really good month and a half in our weekly options model portfolio. I would say it's discipline, risk management, and superior execution. There are going to be losses, and I will show you some of them, but luckily, and I'll show you some in my other portfolio, but sometimes you're the windshield, sometimes you're the bug, and we've been doing good in our weekly options model portfolio. Our primary model portfolio, which I'll also show you, is up 37% just this month. That's February. $23,000, folks, essentially on a $100,000 model portfolio. Okay, enough about performance. Usually I have to do that so everybody wakes the hell up and goes, all right, who's this guy and why should I listen to him? Men lie, numbers don't, and you just saw the numbers, okay? Our methodology here at Top Gun Options is kind of like a Mason's creepy-looking thing. Strategic, operational, and tactical. What I'm going to do is I'm going to give you a quick strategic brief of what is going on in the world, in my opinion, macroeconomically, geopolitically. Why? Because they move the market, right? Vladimir Putin made a move into Crimea, the world freaked the hell out, the markets imploded. Greece, the potential Grexit a couple years ago, freaked the markets the hell out, and guess what? It's going to happen again in about a month. So we got to do a strategic brief. Many of you put a trade on, and then you wake up one day and it's gone against you, and you're like, what the hell's the island of Crete, and why is the futures off 600 points? We knew all about that, folks, because we do our intelligence gathering. After we do a strategic brief, then we break it down operationally to here in the United States. What's going on with the Fed? How are the futures looking? How are earnings doing? All that stuff. Macroeconomic data. How's the jobs report? Average hourly earnings. CPI. We take a look at all of those things on our live trading sessions. And then, and only then, ladies and gentlemen, can you get tactical. You understand me? A lot of these live trading services out there, everybody jumps in and let's start trading. That's me jumping in the control tower of the aircraft carrier and just launching airplanes. Why? Just go. Everybody get airborne. Let's trade. Stop. What is their strategic objective? Tactics support a strategy. Don't ever use a Top Gun options. Hey, I'm trading the strategy known as an iron condor. You're wrong. An iron condor isn't a strategy, folks. It's a tactic. A strategy is saving for college, saving for retirement, buying a boat in a couple months, managing risk. Those are strategies. Tactics support a strategy. So I'm going to show you two tactics here in a couple minutes, an iron condor and a bull put spread on the SPX. Actually a bear call spread. Sorry. I'm thinking about legging into an iron condor next week on the S&P 500. Okay, so that's kind of our methodology. As I said, weekly options are afterburner trades when they're working for us. As you've seen, got 13 kills, 14 kills for max profit. And but when they're working against you, there's just as something horrible could have happened this week. You know, the king of Jordan, who's got a big set of cojones, could have gotten shot down and captured, and then, world markets going into turmoil or something like that as he's executed, and all three of those weekly options trades got kicked in the gut. That does happen. But with limited risk and knowing when to eject and get out of a bad situation, we can get better. Okay? So, types of options, like I said, if you're brand new, I don't trade Forex. I was listening to the presenter in front of me. That's very interesting, but that would be me after flying the Hornet for 15 years, going to fly an F-16 for the Air Force. Well, first of all, they're barely on our side anyway, but it would be tough for me. I'm an equity options guy, and these are the different types of options, right? Leaps out to 2 years. You can trade quarterly, monthly, weekly. What we're going to talk about today is weekly options. They come out technically Thursday. They expire the following Friday. So we're going to take a look at some weekly options trades that we could put on that could be executed at the open Monday morning, and they'll expire Friday afternoon. You can trade weekly options on stocks, indices, on ETFs, right? So we're going to take a look specifically at Apple and the S&P 500 today. And I also want to take a look at the VIX, the volatility index, because that's one of our canaries in the coal mine. I use weekly options to hedge economic and company events such as earnings, and we can potentially profit on our short-term strategic mindset. For those of you that are new to trading options, I'll explain this. If you want to get on board Top Gun Options, we'll give you a ton of training, not education. Training. Training gives you a skill, guys. Fighter pilots are trained, doctors are trained, plumbers are trained, right? I love people who say plumbing's easy, plumbers do it. Really? Anyway, the biggest impact the Greeks have, so to speak, on weekly options that I trade is called Theta, time decay. All right, let me give you a quick example. Let's say I own the Porsche dealer down there in South Florida, down there in Miami or something like that. And you come into the dealership with your briefcase, your silver briefcase full of $250,000 in cash. Wiz, I want that car. You got it, man. The second you peel out of the parking lot in your midlife crisis, you start losing money. That's Theta. That's time decay, right? You guys know about that. Me, as I'm walking back to my office counting my money, I'm making money. Theta. I like a seller of something likes time decay. A buyer hates it. Okay, so I like being the house, right? Casinos don't look the way they do, folks, because they're charities and they give money away. Casinos look like they do because the odds are in their favor. Okay, so time decay we're going to employ in our weekly options model portfolio. My number one strategic objective in weekly options as we look at a couple trades is not to lose money. Period. Well, Wiz, wouldn't your strategic objective be to make money? No, it wouldn't. Rule number 2 is not to lose money. Rule number 3 is to potentially generate short-term income and manage risk. There's where you start making money, folks. You ready for your Yogi Berraism of the day? You can't make money if you're losing money. So I'm going to teach you the discipline to look at potential loss, max risk first before you even take a look at profit, okay? The metrics of me doing that, as I said, I don't want to risk more than $5 per trade, and the average, I'd like to average about $1,000 a week in gains. That's average. So as you saw, $7,600 this week in profit. That's pretty damn good. Other weeks we might potentially lose $7,600 in the model portfolio, but as long as I'm averaging out about a buck a week, that's $52,000 a year in my political science mind. Remember, folks, the key mission objective in any trading, I don't care if it's Forex, futures, stocks, options, is to manage risk. Knowing when to get out of a bad situation and not sticking with it, right? Again, before we take a look at my trading screen, weekly options are what I call afterburner trades. If you don't know what you're doing, you're going to get hurt, period. If you know what you're doing and you manage risk, you can potentially profit, okay? So let's talk about some current tactics. Market, folks, as you know, I'm preaching to acquire all-time highs. Absolutely nuts. The VIX, relatively at historic lows. Well, whiz, it's in the teens. Yeah, historically, folks, the median, average, is about a 20. Okay, I was in the Chicago Board of Trade when it spiked around 80 during our financial tsunami. So relatively, folks, we're at historic lows. World events. We're going to talk about the Brexit in Europe. Like I said, I just got back from Paris and London, so it's interesting to be flying around Europe, kind of flying formation with the Greek finance ministers. He flew around Europe last week. Asia and the Middle East. Obviously, the Middle East, I mean, my God, folks, I saw a fellow fighter pilot get burned to death. You want to talk about leadership? Look at the King of Jordan, man. Hopping in an airplane and going to deliver some serious justice. But I digress. That's leadership from the front. Domestic events. We're playing guess the interest rate rise, folks. That's going to be what's going on. In my opinion, Fed's raising interest rates about June. They're going to stay on course here. Obviously, the low inflation rate going on right now in the United States and good, quote-unquote, good jobs numbers is putting the Fed in a quandary. But if there's any doubt, there's no doubt. They're going to be raising interest rates. One of the things I like to teach my TGO traders is the market only cares when it cares. What the hell does that mean? For example, just because CNBC isn't covering that Iran is enriching uranium and building a nuke doesn't mean they stopped. Nobody goes, all right, folks, nobody's talking about us. Everybody go home for a couple months, and then I'll call you back when the world starts caring. The market only cares when it cares, and it's usually too late for you. That's why, as a portfolio manager, as a former military officer and aviator, I do a hell of a lot of intel gathering, so I kind of almost Nostradamus this, and know what's about to happen. So I like being a net seller, as I said, iron condors, credit spreads, mainly because of this saying, and you can write a couple of these wizisms down, so to speak. Unched on the day equals time decay. What's that mean? If we sell an iron condor on Apple like we're going to, and it doesn't move today, it just kind of wallows around a little bit, up and down a little bit, we made money, and it finishes flat. We made money. If you bought the stock, you didn't. As an options trader, we made money on that, what? Theta, that time decay. So if a stock is unchanged on the day, we get time decay. Okay? Make sure you develop an ejection plan and stick to it. I'm going to show you in these two trades the max risk, and I'm going to show you where I would look to eject out of it if it goes against me. So I'm not going to fly that F-18 in the side of a mountain and go, I hope I can pull out of this. Nope. You're the pilot in command, not me. You need to come up with your own rules of engagement and trading SOP. For me, I'll show you a credit spread in a second here. I eject at around 100% of the loss of the credit I received. Okay, if I take in $1.45 to do this SPX trade we're going to look at, I'm going to eject at what? About $2.90. 100% of the loss of the credit received. You might be 50%. The guy sitting next to you on this webinar might be 150%. I don't know what it is. You have to be your pilot in command because losses can occur rapidly. Okay, so let's take a look here. What is an iron condor? In case I lost some of you, it's simply two credit spreads facing each other. An iron condor is a range-bound tactic. Notice I didn't say strategy. I said tactic. So let's go ahead and do that right now. I'm going to bring up my trading screen because I hate PowerPoint slides and they're stupid. Okay, so let's take a look at the SPX here. Now, you know what? Let's do Apple first, just in case I get crunched for time. Because we've, year to date, folks, let me just show you real quick. Performance. Again, men lie, numbers don't. So here you go. This is our primary life trade brief model portfolio, and I also have my weekly options trades in here. This month alone, we're up about 24 grand. Okay, and that's only on about $63,000 in risk. Do we have losing trades? Yep, gold. But look at all these winners, folks. SPX, Twitter, and where's Apple? Look at that. Let me do year-to-date, actually, even though we're a month and 7 days. Look at our Apple trades. These are 90% of these trades right here on Apple are in the weekly options model portfolio. I have traded some in my primary life trade brief, but let's round down and say 20 grand. We have made $20,000 on Apple trades year-to-date. We have not had, quote, one losing trade on Apple. I had to roll 2 of them because they were going against me, but ultimately after the roll, they still made a little bit of scratch. That's pretty cool, and gold's doing net year-to-date. So year-to-date in this primary model portfolio, we're up 19 grand on about $100,000 portfolio. I had to show you that. That's pretty cool. All right, Apple. Here's my strategic mindset with Apple, folks. Earnings came out. Unless you've been on the moon, you know they absolutely crushed it. Crushed earnings. It was disturbingly crushing. Earnings to me is kind of like a slap in the face. Not that I've been slapped in the face recently, or they ain't over yet, right? So after, it's kind of a, you're standing there rubbing your face going, all right, what the hell happened? Now there's a bunch of 28-year-olds running around Wall Street coming up with what their next move for Apple is going to be. Usually, I've been trading Apple since it was an acorn. Usually Apple tends to channel for a couple weeks after earnings before it makes a little bit of a move, okay? So I think for the next week, now remember last week, guys, we had the jobs numbers, we had some macroeconomic data, average hourly earnings, all that type of stuff. We're going to move sideways here for a little bit, in my opinion, with a little bit of a bias to the downside, okay? The jobs numbers, to be perfectly honest with you, just weren't that good, okay? So let me bring this up real quick. Okay, there we go. Only about 44% of U.S. adults are employed for 30 or more hours per week, guys. So for all the people who were saying this jobs report was absolutely great, Wiz, the unemployment rate actually went up just a little bit, but non-farm payroll 257. Average hourly earnings went up to 0.5%, Wiz. Why are you so kind of cautiously bullish? Can anybody tell me why the average hourly earnings went up the way they did? Who's going to get a gold star? Why did average hourly earnings go up the way they did? Somebody tell me. Because I'm clueless. I have no idea. You ready? On January 1st, ladies and gentlemen, 22 states had a mandatory rise in what? Their minimum wage. Oh, good point, Wiz. I didn't think about that. Exactly. If you're watching Comedy Central and not listening and not doing some intelligence gathering or here at Top Gun Options, you're not going to read underneath it and know what's really going on. That necessarily wasn't a great jobs number, and I'm not even going to talk about the quality of it. My point being is the biggest thing in our radar for the next couple weeks is going to be this, Greece. The Greek finance minister said, hey, you know what, if we don't get a little bit of scratch here, we're out. Okay, he is really, really playing a game of chicken with Merkel. I am not one who would like to owe money to the Germans, and I am not one who would like to play chicken with Ms. Merkel. Okay, Greece must apply for bailout extension on February 16th at the latest to keep the Eurozone financial backing. Oof. This is going to get uglier before it gets better. Okay, the Greek government got elected to be a left-wing. Here's one of the this drives me nuts. One of the reasons Greece is going to run out of cash is because they've had a $1.7 billion shortfall in tax revenue since the election. You know why? Because the leftists ran on being against a recent property tax increase and also some other taxes. So people are expecting that to be repealed, so they're just not paying it right now. So don't get me started. This whole socialist, whatever. Let's get back to trading. The reason I bring this up, guys, is because we always have to look at potential threats to our trades. Okay? So I still think for the next week the Greek shell game continues. I think they talk, hey, let's work out a deal. But I think that's the biggest risk to Apple staying range-bound is a macroeconomic event over there in the Eurozone. I think here in the United States, everybody's going to be digesting the jobs numbers. There really isn't too much on the flight schedule next week. There are some earnings, but net, I'd say 75 to 80% of earnings are done with. Okay, Iron, Condor, and Apple. So, gave you my strategic mindset. I'm going to click on my Trade Monster platform here. I'm just going to click on Create Spread. And it's pretty cool because up popped the most common tactics. Again, not strategy, so I'm just going to click on Iron Condor right there. I'm going to click Add Edit Legs. I'm going to actually, let me just build my Iron Condor right here. And like I said, it's two credit spreads facing each other. Okay, so it's a range-bound trade. I think Apple's going to be trading between 117. It's going to be trading north of 117 by next Friday, in my opinion. Okay, so I'm going to sell, and I am going to do 50 contracts. Each one of these is going to be 50. Why 50, Wiz? Why not 10? I'm going to show you in a couple seconds. 50 contracts. So here's our bull put spread. I'm going to sell 50 of next Friday's 117 puts. That's me saying I don't think Apple's going to be below 117 by next Friday. If I'm completely wrong, Greece wakes up Wednesday and says, forget it, we're out, thanks for your money, and the market implodes, I'm going to buy 50 of next Friday's 116 puts, which means if Apple goes to 0 before next Friday, I'm long at 116 to the downside. So my bleeding stops here. It's kind of a tourniquet to the downside. Now, I don't think Apple by next Friday is going to be trading above 121. Okay? So I'm going to sell 50 of the 121 calls, right? Puts on this side, calls on this side. So this is what I call a football trade. Here's our bull put spread, right? We think Apple's going to finish above 117. Here's what is called a bear call spread. I think it's going to finish below 121. And that blue line obviously right there is Apple right now. That's why I call it a football trade. This football can go Florida State left or right, and hell, it can hit the uprights as long as it falls in. And we'll take a look at the metrics here in a second. So, bull put spread, credit spread. Bear call spread, credit spread. So credit spread equals what? We're getting paid to do this trade. I'm the house. So I'm going to click on Create Order, and I'm going to go mid-market, 50 cents, because market makers don't need another house in the Hamptons, financed by me. I'm going to click on the Analyze button, and the first place your eyes are going to look is Mr. Frowny Face, max potential loss. The max potential loss in this trade is $2,500. Okay, I could trade 100 contracts and make it $5,000 in risk, right? I'm comfortable with 50 contracts. Now I can look at Mr. Happy Face. Once I know what my max potential loss is, I'm going to look at my max potential profit, $2,500. Now these probabilities look a little low right now, right? Your max potential profit was there's only a 37% probability of that occurring. Yeah, you're right. And if I was purely a numbers guy, I'd go, I usually only like doing iron condors that have a 60 or 70% probability. Good for you. We'll take a look at SPX here in a second, and we'll probably look at a higher probability. However, since you're at Top Gun Options, we do that strategic and operational brief. I already talked to you about the jobs report coming out. I talked about Apple earnings. I talked about what the potential threat is with Greece. We take a look around, and we actually use our brains. We just don't sit here and stare at numbers and go, all right, there's 40. Look at this, guys. Obviously, with two spreads, bull put and bear call spread, there's two break-evens. Unless you're the most unluckiest trader in the world, Apple can't, if the football, the blue line's the football, it's not going to cut in half, airborne, and go outside your bear call and bull. It's physically impossible for the stock to split, in this sense, and both trades lose. You can't. And if it does to you, you deserve that because somebody doesn't like you. So to the downside, as long as Apple stays above 116.50, we're good to go. Or below 121.50. That's essentially a $4 range, and that's about what Apple's been trading in for the past after earnings. So nice looking trade right down the middle. And I love the risk to reward, 1 to 1. Right? That's a good thrust to weight ratio too. 1 to 1 thrust weight ratio. Iron Condor. At this point in my live trading sessions, I click preview, and here's what I do. I'm going to do this. I'm going to grab a screenshot of that, not a screenshot. I'm just going to copy that, right? Oops. Hold on one second. I'm going to get this. And I'm going to click send. Now, here's what I do when we're live trading. Now, if you're not in our live trading session, don't worry about it because everything is recorded and it's sent out to you right after the recording's sent right out. We use WebEx and it takes about a minute or two to render the recording, and I send it right out. Doesn't matter though. And if you're not in our live trading session, here's what I'm going to do. As soon as I identify a trade in my live trading session, I stop. I come over to our broadcaster, weekly options, new weekly options, Apple Iron Condor. So if you're sitting in death by meeting Monday morning and you want to stick a pencil in your eye, you're about to get a text from me. Well, my traders are going to get it right now. 50 contracts, Feb 13th is Friday, so Feb 13 expiry. I want to buy 50, if I could spell, buy 50 of the 116 puts. I want to sell 50 of the 117 puts. That's our bull put spread, right? And I'm going to sell 50 of the 121 calls. That's our bear call spread. And I'll buy as a hedge 50 of the 122 calls at a 50-cent credit. Now, I'm going to give a plus or minus. What's that mean? Credit. I'm going to say plus or minus 3 cents, meaning I want to get filled on this trade. I'm willing to go down to a credit of 47 cents, and I'm willing to go up to a credit of 53 cents. That looks good. Let me just copy this real quick because I'm going to put it in my email. So not only do I send out a text alert like this, but I also send out an email with those screenshots. So what I do, in addition to, and hold on a second, whenever I press send on this, I pull up my cell phone, 1 potato, 2 potato, and there's my trade. So I just got a shot of that. So here's what we do. In case, like I said, you can't attend, you can watch the replay. So let me, and you just hear that little deedle, that was somebody else's cell phone getting a text alert. so here you go. Look at this, February 7th. It shows you the time, 12:08, new weekly options, blah, blah, blah. I just sent that out. Here's what I sent out yesterday, weekly options update. Another great week in the model portfolio. 3 winning trades. Apple Iron Condor closed for 23.25. So there you go. Here's what an email would look like. Here's a new Apple Iron Condor, and this was a one-day trade, by the way, guys, that I put on. Here's a new Apple Iron Condor that expires tomorrow. I put this on Thursday. I forgot to cover this one. Look at that. Boom. So I also send out the screenshots of the trade so you can see exactly how I put them on. Okay, so that's pretty cool. So again, you get to watch the replay, you get to watch the and you get screenshots of everything, as you can tell right here. So here's the link to this morning's weekly options live trade brief. You click on that and you can watch it even if you miss it. There's a Twitter Iron Condor we did recently that made $2,400. Really, really nice looking trades here, guys. So you know what? It's a little tight with 45 minutes here, guys. Let me do this real quick, and then I'll go ahead and maybe get that SPX trade right now. Okay, so let me do this real quick. Let me go down because obviously, guys, if you're interested, and I'm seeing a lot of good questions, so hopefully I get some time here to answer those. Here's what I want to do for today. I'm going to give you an opportunity to take a 2-week test flight into our weekly options live trade service, but I'm also going to do one better. The weekly options live trade brief is every Monday morning at 9:45. It's from 9:45 to 10:15. Quick 30 minutes. I put on maybe one maximum of, last week I had 3. I showed you the 3 trades we had last week. 1 to 3 trades each week. Okay, sometimes, love the War Games movie, right, from 1980. Sometimes the only winning move is not to play. Some weeks I don't put any trades on if I think something bad is going to happen or good that I just don't have a sense for. So we use our brains, okay? So what I want you to do, and you can click on the link that Reed's going to put up all there, it's topgunoptions.com/14-days. Okay, that one's pretty easy to remember. topgunoptions.com/14-days. I'm also going to give you access to the primary live trade brief. I just showed you that model portfolio that's up 37% year to date, 23 grand. Okay, that is every Tuesday morning at 0900. Okay, so it's about an hour and a half. It's longer. It's more strategic. The trades are longer term focused, you know, on gold out 2 years, XLE, energy, Russia, Brazil, a lot of good trades. I'll show you those if I have a couple minutes left. So you're going to get 2 weekly options live trade briefs for the next couple weeks. Monday, 9:45, and then we're going to do the primary live trade briefs, okay? Now remember, guys, model portfolio gains can be generated really quickly because weekly options are short term. I just showed you that Apple trade I put on Thursday. In a day, we made $2,300, and again, on limited risk. That's why people get confused about options. Like, you know, I'll be at a cocktail party. I trade equity options. Oh, I heard they're risky. Well, that's because you're ignorant. They're actually less risky, in my opinion, than stocks or trading Forex. But that's just me, and we can talk about it over the beer. Okay? Obviously, guys, you're not going to get into a fighter jet without being fully current on your training. So here's what I'm willing to do. I'll throw in about 8 hours of options training to get you up to speed. Because I have no idea what a call or a put is. Don't worry about it. At Top Gun Options, we do what's called demo do. I'm going to demonstrate how to do something. You're going to do it. Okay? That's what we do in the military. I brief you how to do a loop. I do a loop, and then I give you the stick, and you do the loop. And then I'll debrief you. Okay? We'll give you access to our primary level workbook. That's 198 pages. It's also got some quizzes in there. If you're new to options, this is exactly what you need to get up to speed. And then I'm also going to give you access to the OPCL, the Options Pocket Checklist. Okay? Now, when I went flying, I couldn't go flying with the F-18 manual. It was a phone book, and that doesn't fit in the cockpit, right? So we squeezed the most critical information down into what we call the OPCL, which is the Options Pocket Checklist. We're going to give you access to that as well. Okay? So all of that, you ready for this? For a really, really bad bottle of wine. Okay? $38 is what we're going to do. After the 14 days, if you want to hang out, it rebills each month at $295. So if you can do the math, wait, let me get this straight, Wiz. You made $7,600 in your model portfolio on 3 trades this week. I think $7,600 is a hell of a lot more than $295 a month. Okay. So again, we'll give you access to the live trading sessions, weekly options, and the primary live trade brief, 2 workbooks, and 6 videos, or the 6. Folks, this workbook right here is $195, and then the OPCL is about $45. You paid for it right there with the $38 trial, okay? So you can go ahead and get airborne by adding to cart right here, okay? At the end of the 2 weeks, if you're not digging it and it isn't for you, you just give us a call, and no harm, no foul, okay? Real quick, though, this is the primary live trade brief model portfolio right here. And this is exactly what a hedged portfolio should look like. You got some greens, you got some pinks, you got some reds. This is this looks like the missile firing console of a submarine, right? This is what it should look like, especially on a day when the market was flat. If you're all green or all red when the market's up or down, you're wrong. You're trading wrong. But here's a sample of the positions that we trade long term. AIG, Japan, Brazil, China, gold, Morgan Stanley, Russia, petroleum with the USO, XLE is energy, XLF is financials, XLK is tech, XLP is consumer cyclicals. We are doing great. Love what's going on in a lot of these trades. Gold's looking good. Morgan Stanley trades looking. We put this on like 2 months ago. It's already up $3,200. Nice, slow and steady wins the race. We closed a AIG trade at the end of last year for a $13,000 profit in a year. Averaged at about $1,000 a month. So the primary live trade brief model portfolio is a little bit more slow and steady wins the race. It's not weekly options. It's not putting them on Monday and taking them off Tuesday and putting another one on Thursday. That's very tactical trading. So what I want to do with this offer today, and Reed doing a great job hooking Top Gun Options up with being able to present, is give you access to 2 portfolios. One that's very tactical and one that's a hell of a lot more strategic. Okay, we'll talk about being bullish long-term out 2 years on gold, because the Fed's raising interest rates and inflation might eventually one day in my lifetime return. So 2 portfolios, weekly options, very tactical, short-term quick strike trades, and then the primary live trade brief, which is obviously the more strategic and longer-term trades. Okay. All right, folks. TopGunOptions.com/14-days. Okay, and that's $38 for 2 weeks, and then like I said, after that, it can rebill at $295 if you want to hang out. Know that this is about $720 a month in reality value with the manuals and the primary live trade brief. $720 a month, and we'll give it to you for $295 going forward. Okay, and I'll tell you what, folks, real quick before I hand it back to Reed here, as soon as you sign up for your trial, your test flight, I hate the word trial, go to, because I see a lot of people signing up, which is great, go here. Because you need to enter your cell number so you can start getting text alerts immediately. TopGunOptions.com. Go to Members and then Account Settings. Members, Account Settings, and enter your cell phone number. Okay, so you can immediately start getting text alerts. That's very, very critical for those of you who sign up for the 2-week test flight. Members, Account Settings, cell number, so you can start getting your text alerts. Okay. Reed, I think I'm out of time, my brother. I went over by 2 minutes, which I don't like to do. I'm used to putting bombs through a window plus or minus 2 seconds, so 2 minutes is unacceptable to me, even though we had a little time eaten away. So Reed, I appreciate it. TopGunOptions.com/14-days if you're interested in seeing what's going on in weekly options or strategically in our primary live trade brief model portfolio for the not even the price of a really bad bottle of wine. You can get airborne with us for 2 weeks here at Top Gun Options, okay? And with that, Reed, I'll throw it back to you, my brother, unless you have anything for me.